Hello, good morning, guys. I don't know if you guys can hear me. Can you guys hear me?
Yes, we can.
Yes.
Yes, good morning, sir.
Good morning. Um, Happy Monday and happy start of a new week. This is the second episode of Tea and Charts with Ryan. So, as usual, I think some of us were not here the first episode, so I just want to kind of like reintroduce what the whole essence of Tea and Charts with Ryan FX is supposed to be. So this is supposed to be a weekly start of of trading for us, supposed to usher in analysis, kind of give us a balance to start our week in terms of psychology, emotions, kind of like a lounge and a safe space to start your week off on. So we are on a journey together. So I'm not just leaving each and everybody out of it, but more like we get to talk. Okay, it's meant to be more like an interactive session. After the analysis, then we get to talk. I get to listen to your complaints. We get to talk about how we are feeling at the start of the week, because trading is not an easy task. So sometimes you need to assess, how am I feeling this week? How am I starting out? What do I think my week is going to be like? Do I have a busy schedule? Do I have other things I need to focus on? Am I really seeing anything clear in the market? These are questions you need to ask yourself. What's my psychology like this week? Am I going through, a recess from last week? Did I have a bad trading week and it is, probably affecting, how I am reacting, how I would be reacting to the market this week? So we need to kind of like sit those things down and kind of like sort them out. So before we go any further into the psychology part, I want us to look at the charts today. So I did analyze a few charts over the weekend, and so here's my watch list. Okay, I have about 10 pairs on my watch list. I have USD CAD. I have GBP I have USD CAD. I have GBP I have GBPUSD. I have US30. I have Nasdaq 100. I have USD ZAR. I have CADCHF, Euro JPY, EURCAD, and I also have USD MXN. Okay, so the one thing I didn't put on here is my DXY. Okay, and I want to start out with us viewing the DXY. So we're just going to view that quickly. Okay, so I'm just going to turn up my DXY here. So it comes up. I hope we can all see my screen clearly. Okay, yeah. So this was my analysis on DXY prior to CPI last week and PPI. Okay, and from my analysis, I see that prices was within a channel. Okay, prices was within a channel on the DXY after we had pulled back into demand areas from last year's change of bearish character on the DXY. Prices finally got this premium and pulled back down into demand areas, which was where prices left to start going back up. So kind of we've seen a fulfillment back to demand, and then prices is lingering above this channel here, this bearish channel here, and it's looking for a momentum push to break to the upside. So we have a breakout and continuation of bullish momentum. When you go to your 4-hourly time frame, you see that prices is consolidating within a bullish flag. And in that bullish flag, we've had prices break out of this channel, not just once, but 1, 2, 3, and we're presently above the channel line at the same time. But this is not much enough confirmation to be very specific in what direction the market is going to move. So that's why in trading we look at confluences. So in terms of confluencing, now we're looking for prices to do what? Either respect the chart pattern in which it's presenting to us. Now, in every chart pattern, there's a process to it. So in a bullish flag, we want prices to kind of break above the flag, retest the flag, and start to push to the upside. So similarly, this can also be seen as a strong support level. And we also have some level of, imbalances at the downside here due to low volume of sellers at this downside here. So we don't want to specifically rush the dollar at the moment, because we also have high impact news that will be popping up this week. A lot of macros to consider this week. Now, sorry, please, I would have to mute, some of us because of the noise, because the video is also going to be uploaded for those who weren't able to, join. Now, we want to see price actually break through. Okay, we want to see price actually break through this level of resistance. Now, you might be wondering why I'm not picking here as a resistance. Remember, a resistance is only valid when we've seen prices hold back more than twice. So that's what makes it a valid resistance. Here would just be an area of possible liquidity for me. I won't map that out as a resistance. Okay, so here will be an area of possible liquidity for me. Okay, if you're my student on this call, you probably will understand the concept of liquidity. So here and here will be my resistance point. So I'm waiting to see how prices, would invalidate this resistance level here, probably even sweep this liquidity to pull back in to resistance and make resistance what becomes support. That way, it would then confirm to us that prices have no longer any business with coming back down. Then we will then say, okay, for a fact now, prices, the DXY is starting to look more bullish. Okay, so that's that on the XY. Now, considering the fact that the XY is in a range at this point in time, we would expect to see a lot of range on the dollar pairs. So anything, anything against the dollar, quote the dollar, or base the dollar. So when you say quote, we mean the dollar is on the other side. When we say base, we mean the dollar is on the left, quote the dollar is on the right. So GBPUSD, for instance, the dollar is quote to it, but USD CAD, the dollar is base to CAD. Okay, so taking us back now, when we then finally go into looking at our dollar pairs that I have on my red list, we will then start to understand why pairs like GBPUSD has been in some sort of range. Okay, now the reason why the range is sort of bullish, okay, the reason why this range is bullish at the moment is because the GBP actually is strong, but the dollar is in a ranging momentum. It really doesn't have a direction. So you notice that the market is just channeling, kind of. But due to the strength of the Great British Pounds at the moment, we can see that the range is pushing bullish. Now, if you view your chart patterns very well, you see that we have something that is called a bearish wedge or a bullish wedge. And this is looking something like a bearish wedge where we have prices, kind of in a bearish move, and then prices stops for a moment and then starts to go up. Okay, but it's just consolidating before it continues the downward movement. And that's something like what GBPUSD is doing here. Now, what are the chances that prices would push up to pick this liquidity? Very possible. There's a probability to that. Remember, the market is no playing ground that we say we know each and every road stop. It's more like we are based off probabilities and we stick to what looks like the highest probability due to repetition of patterns. Now, if we are looking directly into this market as it stands right now, we see that no matter how strong the British pounds have proven itself to be, the dollar hasn't proved itself to be weak nor strong, because it's in that range line, you know. So we are looking at what would probably happen. Unless the dollar shows a certain level of weakness, then we would see prices push to the upside with huge momentum. But since the dollar hasn't proven to be neither weak nor strong, the market is just going to keep ranging. Now, for me, from what we've seen on the DXY, I'm for one expecting that the dollar should get stronger, considering the fact that it was kind of weak through the last 3 months of last year of 2023. It was showing weaknesses, and this is the start of a new year. The dollar usually likes to start its year on a good basket of fruitfulness. So meaning that it usually likes to start its year strong. Now, if we look on GBPUSD, like I analyzed last week, we still have this level of, unmitigated demand at this point in time, with a huge imbalance below it. Now, remember we said prices don't return to a demand if we don't have one of the criteria that needs to be met for a demand to be fulfilled, which is the presence of a liquidity in the market just right before the demand. Now, I said when there's no liquidity in the market, what the market does, or what big players do in the market, is they need to induce or create the liquidity. And that brings us to the idea of what an inducement is. An inducement is keeping or creating something that is not meant to be. So they induce this liquidity so that they can finally sweep it to fulfill their huge or bulk demand that's needed in the market. So similarly, we can see something like that happening here, where they've left prices 1, 2, 3, 4, and then we have a demand just below that, meaning that most people who are buying in this market presently all have their stop losses under this level, meaning that there's a lot of money. Because if we have 3 billion of people's stop losses here, that's a lot of money to activate this demand. So similarly, that is my own reason for why I believe prices would need to come down before moving to the upside. Okay, I have a series of things I look out. When I look at structure, I want to look at where presently is the most liquidity, because that's the best place to actually want to find a swing trade form. So I'm looking for prices to actually come down here. So I need the dollar to show strength so that the pounds would then sink into the dollar to activate this demand. Then we'll probably start to take this trade to a certain level of weakness against the dollar. Okay, so that's that for my analysis on GBPUSD in relation to DXY. Okay, and when you look at GBPUSD on a higher time frame, we are strongly bullish. We are very, very much bullish. Okay, we're very much bullish to the upside on a higher time frame. So I'm looking to see that bearish correction and then continuation to the upside, probably to come and take out this weekly buy sides above this level here, which is very much possible. Okay, so that's that for GBPUSD, and all I'm doing is just sitting on my hands and watching how it's going to play out, what is going to happen or what is not going to happen. But if peradventure we have prices actually breaking to the upside and respecting prices moving to the upside here, then we'll see a strong close. Then I'll probably say, okay, we probably would then stick bullish and have prices pull back in before we continue going up. But for now, I'm just going to keep watching GBPUSD. So no entries for me, no midterm entries for me or whatsoever on GBPUSD. Okay, and that's that for GBPUSD. The next pair I have is US30. So I've had this analysis on US30 since last week. I called out trades on it, made profits of it if you are in the community. Some people made profits off it. Some people couldn't take it due to its volatility level and, amount in their accounts. So I'm just going to hide this for a while. Okay. Now, US30 is at its highest of all time got to its highest of all time at $37,787 for US30. And that is its all-time highest ever. Now, the theory of an all-time high is when prices get to an all-time high, it needs to kind of like reset itself, because we've seen a huge influx of bullish momentum, and you can't keep up in one direction in the market, because if there's just one singular direction in the market, then it's no longer the market. You need to be a presence of buyers and sellers in the market. So wherever there comes huge momentum of bulls in the market, bears need to actually come back to take charge and take control to kind of even out and create a balance in the market. That's the whole idea of why imbalances are present in the market. And when imbalances are present in the market, they need to be covered up by the sellers, because we've bought so much. Now, people who have bought so much need to sell off to make profits. They need to take profits off the market. So similarly, in that likeness is why I had this analysis on US30. Now, US30 coming into the market, we saw it creating a bearish wedge. Again, remember I was saying prices came here and created this bearish wedge and then broke out, went back, retested it, and then started trending to the downside. And then prices went back up to kind of test this area of resistance. Remember, there was no previous resistance in the market at any point in time, because this is its highest point. So prices have never been here before. So what's happening at the moment now is prices needs to create a resistance at that level. So if prices have gone back 1, 2, needed to go back to test it again, and prices came back there, went up there, kind of swept little the stop losses that were above this level. Stop losses above here, picked them all, and then started to come back lower, and it's trending back to the downside. So giving us what? A double top. Now, in terms of pattern recognition, a double top is what? A double top is a reversal chart pattern. And double top is one of the strongest chart patterns you find out there, the double top and the double bottoms. Now, it all is dependent on where you find the double top and the double bottoms. Sometimes we find double tops and double bottoms within a trend, and then we want to jump into them. Most times when you say double bottom and a double top within a trend or a certain structure, it's just going to serve as a liquidity. So for instance, you identify a double bottom in a bearish trend. Obviously, it's just going to come and clear you out, because you're not in a level. You need to find the double bottom or the double top in an area of high demand for where prices needs to reverse from. So finding a double top at such an area of an all-time high is very crucial. So what do? We've accumulated some profits off here. We've also taken profits from here as well. We've also taken profits from here as well. So what are we doing now? We need more confirmation for this double top. So we've tried playing the risk entries and all of those things. So it's time we try and play it a bit conservative. Now, I know for a fact there's a lot of money to be made from here, which is true. Now, if you have the risk capability, you can actually take the trade from here and set your stop loss above here and watch prices come to the downside. Or you can risk it in a more conservative way, where we want to peek in through the law of the double bottom, double top chart pattern way, where we want to see a break of the neckline, a retest back of that neckline, and a continuation to the leg of the double top or the double bottom, whichever one it is. But now it's a double top, okay? And we want to play it safely in this fashion and in this manner. Now, if we're able to get this, then we would then see that prices fulfill my initial point, where I believe prices would come back down to somewhere around 35 to 36,000 just so that it does a proper break and retest. Just so it does a proper break and retest of the higher time frame previous resistance, which is this level here. So this was the highest point from mid last year in July, and this was the highest point at the end of the year. So we need to see what a break and a retest pull back into, like the 38.2% of this level, which was the previous support level, the previous resistance level, to become support level, then prices would push to the upside. So US30 is still very much valid. A trade that we can, legit sit on and keep making profits off it. Just due to the whole volatility level is why, a lot of people are very scared and skeptical about it. But for we that are going to be looking out for more swings, what we're going to be doing is we've identified this as a swing. So what we're going to constantly do is to scale into positions. So for every time we get a position to go bearish, we're staying bearish. So we shouldn't be looking for bullish, sentiments on this right now, especially when it finally breaks below here. The moment it breaks below here, we shouldn't be trying to look for bullish sentiments. Rather, we should be looking for opportunities to keep scaling into the sells. The buys would be counters, and counters could be a bit dangerous on a pair like this. So we want to focus more on looking for opportunities to sell. The worst case scenario I see happening on US30 is prices coming above here to pick stops above here, and then like a quick pump and dump. And that dump could just happen so massive, just like the way this candle happened here. So we could just have that pump, clear stop losses, and then start dumping aggressively. That's the worst case scenario I foresee for one on US30. So this is that for US30. I'm still going to be sending our analysis. Now, let's say we want to make an entry, okay? Let's do a quick run through, and let's see. Let's go to a smaller time frame and say we want to make an entry, okay? What we're going to be looking for is, I know I'm supposed to be taking tea, but I am doing a challenge right now, and I have to take this for 10 days. I'm on my 7th day, so hopefully by next week we'll get to the tea part. So here we've had prices, prices have actually swept this liquidity here. You can see this 1, 2, 3 prices actually have swept it. So in order for us to want to take sells right here, for me, I want to see prices change the character of this market at this time. Okay, so we've been sort of like bullish, bearish. The market is in a sort of range at the moment. I would want to see prices, take out this area here. I want to see prices take out this area, because this was like the last area of a higher low that was created without a higher high. So I want to see price run into this level, pull back in. Probably if prices don't take out this double top here, this double top liquidity here, I want to see prices run these lows, run these highs at this point. Then I would make an entry. The moment it runs these highs, then I would make an entry to target this higher time frame lows here. So two things is very needed at this point. First, we need to run these lows, we need to run them out. Then we need to run these highs out, because this is like the Asian range. So we need prices to like run these highs out and run these lows out. So you needed to run the lows of last week. These were the lows from last week, Thursday, Friday. You need them to run it out, then run these highs as well. Now, if prices run these lows first, I'll be expecting prices to pull back bullish to clear these highs. Then I would make an entry. But if prices run these highs, first of all, we get a run on these highs, then prices run on these lows, then I'll be looking for a 61.8% pullback or a 50% pullback to finally take the trade. So either of these needs to play out first before I jump into the market. I'm not just going to jump into the market immediately right now. Okay, so this is speculative and sentiment on what I would do, is how my own system works. You could have a different system that works perfectly fine for you to make your entries, okay? But this is that for me if I'm going to make an aggressive entry on this pair, because I doubt it's going to allow you the liberty to kind of like find a break of structure or a change of character and all of those things. Maybe if you scale lower to kind of like the 15 minutes time frame, possibly we would get that. I say 15 minutes, like the 5 minutes, 1 minute time frame, you get that. Okay, and that's that for US30. Okay, I'm trying to see how I can be done with this analysis in like 30 minutes, hopefully. Or if not, then we'll go further. Okay, CADCHF is the next pair I'm looking at. Now, mind you, like I said, there's a lot of macros. We have the British CPI this week. We have the Canadian CPI this week as well. So it's going to really be a tough one in the market. And before I forget, this year we want to be very intentional about studying fundamentals. When I mean fundamentals, I mean your macro, macroeconomic releases, because there's going to be a lot of tribulations in the market, even not just your macros, but even world news as well, because with the rise of natural disasters, politics, I think the US election is this year. So there's going to be a lot of instability in the market. So you really need to be careful. It's not that it's going to just come and destroy the market, but a lot of day traders are going to be swept off the market, honestly, because rapid events could happen without even foreknowledge of them happening. It could just be one slight political, news or something, and market has just 1, 2, and then has gone back to its normal direction. So lots of stop losses are going to be collected this year. Okay, so for CADCHF, we have this from the daily time frame. Okay, let's look at it from the daily time frame first. Okay, yeah, so we have this on the daily time frame. We can see prices, trending very, very, very much to the downside. I honestly don't know what's wrong with my trading view, because my network is perfect, probably because it has been open for a long time. I'm back, and I hope you guys can hear me. Okay, so yeah, so we've been trending to the downside properly, and here we have prices coming back into this previous support that was broken, became resistance, very much strong resistance. It's sad I didn't meet this on time, but I think this was like last year. So we also have a minor resistance forming now at this point here. And it seems like prices have also retested it. So I want to take a crazy, very, very crazy risk right here. And I want to take this trade as a possible swing to the downside. Okay. Just a 1 to 2 risks to reward here to see prices put in, because when we pull out our RSI, I use my RSI a lot. If you're my student, you know that I use my RSI a lot, because your RSI shows you strength momentum. It's a strength momentum index. Okay, if prices haven't gotten to a low point, it means that there's still possible chances for a downside. Okay, so I'm expecting prices to pull down, considering the fact that we have little to no obstacle. Like, it's a free fall. Like when you go to your monthly, there actually is a very, very free fall, and safe havens are going to see a lot of money pumped into them this year, because when there's war and everything, people run to safe havens like gold, JPY, CHF, stable economies, you know. And so yeah, we have a free fall. So I'm expecting more sells. And we still have our RSI, haven't gotten to an oversold position. So we should be getting more falls to the downside. Okay. But for now, I'm just trying to see how this plays out on a lower time frame. I'm trying to see what is going to happen on the lower time frame. Would we get prices come back to clear this area here? Okay, this was the last series of highs in the market, and we do have a supply at this level here. So could prices be creating, you know, creating some sort of a liquidity trap here, a pool of money to pull back up in here and drop? Or would we see prices just sink? So it's a tricky one here. So what I intend on doing is mapping here out and mapping here out. So remember, trading is a game of probability and risks. Okay. So my plan is to wait for a break on a smaller time frame here, take the trade here, put my stop loss above here, hit here as my first take profit if it eventually does happen as a mid-term trade. Okay, this is probably going to take like the whole day or till the next day, because this is a mid-term trade, and say the CHF is a minor pair, so with a lot of range and slow movements, if not for times where it has done something like this, which I believe is accosted by the news, because you can see the supply formed just right before the news and the drop. So that's that for say the CHF, and you know, expecting to see prices pull back in here if this doesn't happen. So we'll see buys all the way into this level, then we will take the proper swing from here, and then we would go with a 40 pips risk possibly, and we would target our initial, and then we would be aiming to see that we get like a 1 to 5, 1 to 6 risks to reward on this trade if this eventually plays out. So it's a game of probability, and like I said, you don't have to take every trade in the market. We might not be allowed that leverage, you know, to get every trade in the market. But most importantly is you need to make sure that you make the best of the ones you take. Okay, and that's by managing your emotions, controlling your risk, assessing your risks and controlling your risk, you know, managing your psychology at that particular point in time. Those are the things that are going to actually help you make the best of your trades. Okay, so last but not the least, okay, we have one more pair. Yes, this pair I was supposed to send out last night, and honestly, it didn't get to my point of entry, and it saddens me, but it has moved already, and I'm really hoping it comes back down, because this is a valid level here. This is kind of like a flip zone where we had a previous resistance and we have a demand at the same point. So this is like a flip zone, and scaling Fibonacci retracement tool, this is a 61.8 and this is a 50%. Although it is a valid retracement because we've pulled back down into discount areas. But I really was hoping to get 61.8 at this level, because this level is a proper confluence, because we have previous resistance, turned demand, pushed prices to break previous highs. So it should be a valid level of a support. But I don't know why prices started moving and left us behind. But by the special grace of God, if the gods of the market allow it, let prices pull back in and let's take this trade, because it's a very good risk to reward. We're risking just 30 pips. We're risking just 30 pips to make. We're risking just 30 pips to make just 30 pips to make 300 pips. So this is like a 1 to 10 risks to reward, which is awesome if it actually does come back. Hopefully it does. I hope it does. So EURCAD is the one trade that I'm in already. I'm in on EURCAD, long-term swing, like big time swing on EURCAD. Okay, so let me scale us to the weekly. Okay, then I'll be back. So on the weekly, EURCAD is approaching, like, it needs to pick this area here. It's supposed to sell, but we've seen prices stay bullish for a very long time. Kind of created this break of structure, in structure, change of character. And when we zoom in a bit, we see price action here. Prices tendering this trend line, 1, 2, 3. And if you look just within the third touch, what we have here is a sort of morning star formation. So prices is looking to be what? Pushing to the upside. Now, if you go to the daily, you would see, you'd get this. You get prices consolidating just around this area of support. Key level, very key level. Okay, I didn't just want to use a rectangle to draw it, but we've seen this area act as a level of what? Support and resistance severally. We've had 1, 2, 3, 4 breakthrough, breakout, and finally coming back to retest it again, and prices pushing up. So what I simply did was look in this structure here, in this range here, to kind of like get some sort of confirmation. And that was on my 2 hours chart. And here we've had prices trending lower here. Okay. And we've had a previous break of structure, had a break of structure here, prices coming lower, breaking below both previous lower lows. Okay, guys, so if this call ends at any point in time, just click on the next link I am going to send, or just click on this same link. Okay, you could use my previous meeting ID, just put it on your Zoom, type in the password, you connect back into here. Okay, so like I was saying, previous lower lows taken out, then previous lower high also taken out. So we had like a change of character, break of structure, and prices came back into demand area and is trending high. Now we have possible liquidities to be taken above here. It's the first start of, so we can see prices coming to this area of imbalance here, first of all. So that's why I have my TP1 here, my TP2 here, just above here as well. Now, if you turn on your moving average, which I use the 50 moving average, we are strongly bullish. We can see prices staying above the 50 moving average. And so, like I said, on EURCAD, you plot your moving average. I use the 50 and the 21 exponential moving average, day moving average. I feel like they have a wider bandwidth of how much they can accumulate, you know, at the end of the day. So it makes it much more comprehensive for me as a swing trader to kind of like know where prices are headed towards and where prices are not headed towards, kind of thing. You get, so that's why I use it. I use it to kind of like find and make sure I'm on the right path and direction. Okay, you could also implement that in your own trading. So that's that for EURCAD, and for EuroJPY as well. If you plot your 50 moving average, you see how prices kind of like stopped on the moving average and is heading to the upside already. Okay, and this is on the 2 hours, but on the 4 hourly, as of yesterday when I plotted it, it seemed like prices needed to come down here a bit. I don't know if you guys can see it. Needed to come down here a bit and, you know, pick up, but seems like prices didn't do that. It stopped on the 2 hour time frame and just picked up from there, which is sad, very sad. Because this right here, this move right here is about, where's my price to? This alone here is about 76 pips already. This, about 80 pips. This is good money if you think about it. 1.0 here is about $800. But anyways, let's let it pass, okay? We don't have to take all the trades. We don't have to catch all the trades, like I said. So that's that for the analysis this morning. And I would send out all the charts, you know, as soon as before I head out, or as soon as I'm back from the gym. So So that's that. So let's talk now. It's time to talk. It's time to relate. So first off, I would always start out with manage your risks, but first assess them. So let me I have a notepad here, okay, where I kind of like jotted down my risk. So I don't know if it would be clear enough for you guys to see, kind of. I doubt you can see it, but it's my risk system, okay? So I said 1% split into 4 trades, 0.25% targeting 0.75% to 1%. So therefore, 1 to 3 risks to reward or 1 to 4 risks to reward is perfect. Okay, so you could see me take a trade with my stop loss at 100 pips, but for a fact know that my reward is greater. So it's a swing. You can see my stop loss at 50 pips, but my reward is at about 120 pips. So my risk to reward is static but fluid at the same time. My risk assessment and system becomes, I adjust them when I am in a recovery mode. So let's say I took a trade and I hit a stop loss and everything. So what I do is I cut down on my risk and my reward at the same time. So what I do is I try to like give myself time to stretch my trades up onto a few trades till I'm able to get back into profit, kind of thing. So that's what I do. So you need to have a risk system that you kind of abide by. And if at all you want to be indisciplined, have an account where you practice your indiscipline. For me, I have an account where I flip. Sometimes I put like 10 bucks and I flip it. I could flip to 50, 100. I could put 20, flip to 100, whatever. But when you have a main account, it's only okay for you to give yourself that integrity and respect the account and know that this is your account. Okay, you want to respect it. Okay, so that's that for risk system and allocation. Okay, so I think someone on this call, I just saw your message because I opened my Instagram when the call went off, and he asked, he said, what is my risk profiling? So that is my risk profiling. I target 1 to 3, 1 to 4. Okay, on points where I get very sharp entries. So let's say I took an entry from here on this trade, and my stop loss was just above here, below here rather. I would be targeting like probably a 1 to 6 due to the fact that my risk entry is much more minimal. But in terms of my risk profiling, a 1 to 3 and a 1% because it's a big account. If you're using like a smaller account, you can do it at 10%, okay, or a 5%, depending your risk appetite. But my advice for you is, if your account is a small account, do your best as much as possible never to risk more than 10% on a given set of trading days. So if you have like 1,000 bucks and you want to risk 10%, which is 100, spread that 100 across your trading days. If your risk appetite is low, spread it across your trading days. Let it be like in a week, you're risking just less. Moreover, you're a swing trader, it makes it easier for you, okay? So what you want to do is 10% spread across 4 trades. That would be 2.5, 2.5, 2.5. So moreover, as a swing trade, you're not expecting your stop losses to just hit at any random point. Your stop loss is a bit wide, maybe 80 pips, 90 pips, 70 pips. Before prices get to your stop loss, you've had enough time to kind of assess the trade. Is this going to hit my stop loss? Is prices looking funny? Do I think prices won't, play out? Do I expect them to play out? Or should I take the risk? You have enough time within that stop loss range to kind of assess your risk at that point. What should you do? What shouldn't you do? So
Yeah, we see one. That means
you can spread that 10% across your week. And if you take all those 4 trades and you lose those 4 trades, at the end of the week, your account is still safe. You still have 90% to yourself. You could come back the next week and risk another 10%. And in risking that 10%, if you make 2 trades out of the 4, you've split at 2.5% on each trade, and your target is a 1 to 3. It simply means that if you make 2 trades, you would be making 7.5% on each trade. within the 2 you made. So if you make 2, you'd have made 15%. Now 15% covers up for the 10% you lost last week, and you have 5% in profit for the week. So you can go into the next week having the idea that you now have 5% to yourself, which you keep as your own profit, or keep part of it as your own profit, and keep part of it as a risk shock absorber. So you could go into next week, instead of using 10%, you could go into next week using 12%, because you already have 5% from last week. You took 3% for yourself, and you have 2% to risk more. So you're increasing your risk appetite just by by the nature of how you're trading and you're going forward. So you see, you're putting yourself afloat in terms of risk. Okay, and so far so good. The more you do that, the more you increase the value of your portfolio. But if you go and you're risking 25%, it's harder to make 25% back, especially when your target is 1 to 3. Because if you're doing that and you lose all 4, you'll be down 25%, and then you need to now make back what? You need to make back 32% to actually cover up the loss and bring your account back to the actual balance and all of those things. So I would send out a PDF, a proper PDF. I would type a proper PDF probably by next week on how I view my risk, and how I kind of like profile risking, because it's very important. And it's the reason why a lot of people, fail prop firms. I failed prop firms, and one of the reasons why I failed prop firms is, antagonizing my own discipline. Well, the moment you do that, you fail most of your prop firms. Okay, so that's that for risk. And whatever trade you're taking this week, keep your mind in set. If you don't feel like trading, don't trade. If you feel like you're not in the right frame of mind to trade, don't trade. Okay, so enough of talking from my own side. Let's get to hear from the audience. What do you think your week is going to be like? What do you think was your biggest challenge last week? And what do you feel we can do about that to make it better?
Good morning.
Unmute yourself to speak.
Can I speak?
If you so wish to.
Good morning. Can I proceed?
Hello.
Good morning. Hello, can you hear me? Good morning, sir.
Yeah.
Can I proceed?
Sorry, let me just quickly check that.
Okay.
Yeah,
Thank you very much for this opportunity. Okay. Thank you very much for this opportunity. And giving out your time, because you could decide to be selfish with this, but you choose to be generous with it. So I want to first appreciate that. It's not something that comes by easily, because time is not what money can buy. Can't buy time. We can't buy time, and you're giving it to us for free. So, firstly, I will like to push with the point that you just spoke about with risk management. You said something, because I don't know. I've actually commented on the Telegram before, where I said, man, I've made more money from binary scalping, but when I looked into your risk rewards, because I started following like 2 weeks ago. It's barely 2 weeks I started following you, and I started looking at the swing ideas and what one would be risking on a particular trade and what one stands to gain. Man, I found out like that's insane and crazy. Like it was too true to believe first. So, and it occurred to me that, okay, what one really needs isn't the large capital, because the truth is, if you can't manage $50, you can't manage $500.
Fact.
If you can't manage that very, very little money, you can't manage $500. And I think like what we're trying to do is I was speaking the other day on the Telegram channel, like, Omo, she is not like I will look for how to get a prop account of 100K or 10K and stick to just you alone, and make big money. But guess what? When I checked, like, I discovered like $100 could change somebody's life forever if the person follows good instructions and good risk management. From what you're doing here, because I mean, calculatively, you're giving out like potential trade ideas that could give like 500 pips in a week if one sticks to it. I mean, like, not even saying you are waiting for all of them to eat TPs. Let's say you're just taking 80, 100 pips from each of the trades, and you're risking just like I don't know, I don't know, I don't know what person will be risking. So I feel like, okay, if we have this mindset of, because last week was very funny and creepy because um I wanted to first of all um execute a particular US30 idea, but then I saw like this thing is not respecting the zone and I'm not seeing any reason to go bearish. So I had to like pull back. So I was even commenting like, we both tell us when to execute. And somebody replied me like, sometimes if it's opportune, you let us know. And if it's busy, we just look for it ourselves. So what I want to appeal for is, because some of them are new to your system and we're trying to adapt, is it possible you carry us along this week when it's time for us to go in? So at least we can at least also make some little breads from it too. Because I mean, I believe in this pattern, I believe in this system, and I want to stick to it. Me personally, I don't want to go get a prop firm or anything. I want to use my life money to trade this, and I want to be someone that will be able to stand and say this person changed my life. I want to be someone that you can point out at any time like, oh, this is a result. This is one of my results too.
Yeah.
So I don't know if it is also possible that you follow up on us this week properly and like, okay, guys, go in on this trade. And if what you already said is a good idea for the risk management plan, so we all know we are safe. If we have 1,000, this is what we're risking this week. If we have an account of $100 or $200, this is what we're risking this week, and this is how we split it. And so when you are saying, okay, you make 8,000 of this trade, you know, like, okay, the minimum person that was in this group who is using 0.01 should at least have made like $100 or $200 this week too. So, you know, like, okay, if everybody is sticking to what I'm saying or 1%, it means that at this point, the most lowest person here should have made $500 so far this month. That's the only way we can track ourselves and carry ourselves along. And like, okay, everybody here is making money. So when it gets to that point of like, okay, guys, you need to go big, do this, do this. Let's create a meeting room. We're meeting live, doing all of this. You know, like, we've worked for it. We deserve to be there, and being there for any charges will not be a problem. Because I also screw up and I saw like, okay, you did a live meeting with everybody, you guys were in a room and all of those things. Some persons might not be there because of money or something. But this time around, you know, like, I fed you guys. I spoon feed you like babies. So you don't have an excuse to tell me you failed this time around. So that's just what I want to appeal for. I'm speaking for myself. I don't know if others might be very comfortable with doing it their own way or risking it. But if I have you, I don't think I want to take all those risks. Because that's what I'm following you for, crying out loud.
Yeah.
All right. Thank you.
No problem. So I just want to, I kind of like want to expatiate on something. Yeah. The reason why you say I don't call trades. Yeah. I used to call trades. If you check my history, I used to call trades a lot. But now there's a mentality towards signals, and people get kind of lazy. Do you get? They get really lazy and they want to blame you for their own mistakes when you call trades. And okay, see this trade for instance now. I am on this trade and I'm on an 85 pip stop loss. Now, when you call a trade with 85 pip stop loss for people, some people don't calculate their risk. They just rush in and boom, before you know, someone has put 1.0 lot size here. Prices come back to hit stop loss. That's $850. and probably does his account like a 2K account. You know, some people tend to feel like because you provide signals and you give advice, you are a god of the market respects you. And it's not really that way. So sometimes we just tend to avoid it. And sometimes why I don't really call trades is I could give you an entry and enter before you, honestly, because I have the psychological bestowment on me, yeah, to sit in a trade with losses and smile. It's kind of like a gift on my own side. Yeah, I can sit in a trade in loss because for a fact I know what I have seen before I had taken that trade. So I'm calm in all situations. It's not easy for other people. So I could enter a trade way before the entry requirement is met because I know for a fact this is my trade. You get, I know for a fact that this is my trade. So me calling that same thing for you now could put your own account at risk because I don't know what the value of your account is. And then I would be seen as what? I would be seen as a bad trader or a terrible person, or I don't care about my followers and all of those things. But sometimes you see, there are times where I could get entries and I give them out. Okay. If I'm active, and I'm not always on my charts because that's not the kind of trader I am. I can't sit always on my charts. I have other things to do. I'm doing a little shuffle and hustle here and there and all of those things. So that's why it's not easy to give those kind of, precise signals. So sometimes if I want to give a signal, I'll give a limit order, or I'll tell you to keep eyes on this particular price level or price area, so that when prices get to that area, from the whole essence of all these calls is to kind of help people understand how I view the market, so when I give an analysis, you kind of have an idea of what I would be looking for me to take the trade. So when you come across that, you're comfortable enough to take the trade as well. So in all honesty, that's even the reason to why all of this is playing out. But like you said, I would do my best to try and make sure I'm able to carry everyone along as well. Yes, please, you sure can take the EURCAD as well. You can take the EURCAD as well. You can take EURCAD as well. Yeah, you just assess your risk because the stop loss right now for you, if you're entering, is going to be at about 100 pips stop loss if you're going to take it now, because I'm up like 13-14 pips in profit already. So if you're going to take it now, it's going to be like 100 pips stop loss. So just assess your risk properly. Okay. So Adex, I would look into what you've said and see how best we can do it in that fashion and in that manner. So any other thing we want to talk about? Anybody want to say something before? Because I'm ready already. I'm about to head out to the gym. So anybody has something to say, has anything to add, has a pair he wants us to look at, because I definitely can analyze all the whole pairs. So if you have a pair you want me to look at, we could just quickly look into it before the call ends.
Hello, can you hear me? Good morning.
Yeah, good morning. I can hear you.
Hi. Thank you for your time to show us what you've shown us so far. I asked you the question on Instagram.
Yeah.
About the risk profiling. That was a good answer. I would like to talk about that, but there's something else I want to ask you about, which is when does your discretion come into play versus
where does my
mechanical discretion? When do you get this discretionary in the market? When does it come into play versus being mechanical?
Okay, where does my discretion come into play instead of being mechanical?
Yeah.
when you say
I mean,
discretion,
you can be both at the same time.
exactly. That was what I was heading to. Because when you say discretion is more like you're talking about, when do I get to that point where I'm like, okay, this is this and this is that. I need to even out and tell myself, cut your losses short, take your profits early, and those are mechanical aspects to trading. These are your chart processing is your technical aspect. Your mechanical aspects comes from the mental decisions you make while you're trading. So if you say discretion and mechanical, it's more like, for me, I feel like it's like embedded into the same thing. For me, it comes in when I start to see prices defiling what is meant to be. So you are in a trade, let's say for this EURCAD now, and let's say EURCAD gets to TP2, and at TP2 is showing like some sort of extreme resistance at that point. Like prices keeps going back and it's failing to break. It keeps going back and it's failing to break. It has to be something altering my sentiment and normal market, structure or conditioning. So once it gets to that sort of point, I then start to result into applying my discretion. So I'm like, you know what? At this point in time, I've gotten to TP2 already, yeah? You know what's going to happen? I'll take 60% of my profits off the market. Or I'll take 65% of my profits off the market. Now, discretion would also need a part of your discretion would also need to be at your appetite level. Some people get very greedy. Now, for instance, you need money. You're on a trade that is giving you $400, but you're so greedy you want it to get to $1,000, and you need money. Why not take 200? You could think about it. I could take 200 off this thing and know I have money, for the week, and I could let the remaining one run. So at least at the end of the day, as bad as it's going to be, I have money that I need money, and I need money, so I have money. And then let the remaining ones be runners. So at that point in time, a natural response for me is going to be what is most important. So for instance, let's say I'm trading a prop firm account and my initial target is going to pass the prop firm. And I get to a point where I'm seeing market is showing huge resistance at a particular point in time. Definitely, if my target was to make 6% and I'm up 3% already, or 3-point-something% already, what's the need to want to be stubborn when you could take 2.5 or 2.7% off the market, considering the fact that the market is always going to produce and provide the next opportunity? Why be stubborn and stay greedy till you get to the whole 6%? What if prices starts to reverse aggressively and changes the market dynamics at that point in time? So that's why I said the need for you to be in a mental state where you're not just being wholly emotional, but logic comes into perception. So in terms of discretion for me, technical things is what makes me get mechanical. So if I start to see prices, for instance, now, mind you, this EURCAD now, for instance, on the 4-hourly, this is where the stop loss is. On my daily time frame, this is where my stop loss is. So when prices take out this, if prices breaks this level here and this area fails to hold this level, I would start to look and say, okay, what's happening? What's happening next? Let me watch and see. If prices still fails to break any of these levels here and start to show bullish momentum again, I would then be convinced to go into the trade again. But if prices should, for any reason, violate these lows here, I would start to see reasons why I should become very much careful of this trade. You get? So your technicals is supposed to act as a backing, as well as your appetite level in the market, what your goal is at the end of the day. Some people, their goal is to prove to people that they are right, when in real essence the goal is to actually make money off the market. I don't care if I get to the final TP or not. I'm not trying to prove to you that my analysis can get to the final TP. That's a probable destination for me. That's the final TP. But the most important thing for me is to make money off this trade. Am I going to make money off this trade? If I can make money off this trade, it was a successful trade. So my discernment all boils down to what is right and what is wrong. And then I use that to fuel my discretion. So if I start to see things looking a bit shady, I look at my appetite. What's my main goal? Is my main goal to prove to people that I can hit TP3? Or is my main goal to actually make money off this? I'll take some money off the market, take 70%, 75% off the market, and let the remaining one run. Because at the end of the day, if it gets the final TP, the remaining 25% can accumulate me a good amount of money at the same time. But the most important thing is I've made money off this trade. So does that answer your question?
Yeah, it does. Thank you. Another thing is, sure your strategy provides you with effective setups.
Yeah.
So within your effective setups, let us say the setup A, and in this setup A, how do you differentiate between when an effective setup is a poor trade versus a great trade?
I don't understand. Ask that question again.
How do you differentiate when a setup which you've already identified as effective, how do you differentiate whether it is a poor trade versus a great trade? Because the reason why I ask is because obviously you know that. Okay.
Yeah, go for it. The reason why you ask is because of what?
The reason why I ask is because we know that just because a trade turns out to be valid, just because a setup turns out to be valid and you're looking for an entry, doesn't mean that it's high probability or effective. How can you tell that this particular trade isn't this particular trade is either poor or great? Just from the outlook of it, could turn out to be poor or great.
Now that's the thing. You can't tell if a trade is going to turn out to be good or bad. You see, according to Mark Douglas, in one of his books, he said something. He said, your first growth as a trader is coming into acceptance that the market does what it wants to do, and the market is always right. No matter how much probability it is, whether it's high probability, low probability. In fact, a low probability trade could even be a great trade. So
yeah, exactly.
it's not about how much your analysis works or not. What makes you in fact, the word trader that most people don't understand is risk manager. That's the meaning of the word trader. As a trader, you're a risk manager. That is what puts you in distinction between the markets. The market provides the risk, you manage them and make money off it. So everything in the market is a risk. It doesn't care if it's high probability or it's not low probability or it's not. It's your ability to manage your risk towards your appetite. If it's going to kill you or if it's not going to kill you, what you can take or what you can't take. So I can't for one tell you, oh, this is going to be a great trade. Everybody put in money here, no. I've had A1 setups. I've made losses from A1 setups. When I mean A1 setups, these are trades, these are patterns that I have traded 10, 15 times and I've made money from them and I still lost money off them. So,
thank you.
So understanding what works for you is one thing, but also accepting the fact that it could go wrong is another thing. So that's why if you read the prayer I posted in the group, is the end in is to help you accept what was and what is, even in losses and even what in profits. That if it doesn't go your way, it's still fine. And if it goes my way, it's still fine. But the most important thing you pray of is that you understand how to assess and how to manage your risk in any time or at any time possible, because this trade could go back and hit my stop loss and I'm going to be cool with it, because at the end of the day, I took the trade. I was well aware. I was in the right frame of mind. I was conscious when I was taking the trade. So whatever happens is up to me on this trade. I can't blame the market. I can't say, oh, but this thing was supposed to play out. No, it was a good setup. If it goes my way, we thank God. If it doesn't go my way, we thank God. We move on to the next, and that's it. If you sit and dwell on what trade was good and what trade was bad, then you're going to be in a constant therapy session with yourself. I would have done this, I would have done that, and then you're never going to do what is in front of you. So good or bad trade is not of your own doing. It's of the market. What is of your own doing is how much you make and how much you lose.
That's a good one. Finally, I want to touch on risk profiling,
Okay.
like I asked before, and how your risk profile, when it comes to prop firms, because prop firms, they have a daily drawdown of 5% and then have a overall drawdown of 10%. This is like one we're very familiar with.
Yeah.
And how, for me, the way I have profiled my risk is that risking 1%, if 1% trade turns out to be a loss, yeah, what is my recovery plan? That is the question I ask myself. What's my recovery plan? What's the easier recovery path to take versus risking 2-3% on a prop firm account? So if I'm to enter a trade risking 1% on a 1 to 5 or 1 to 10, that trade ends up being a loss of 1%. I will die down to my next trade can be the 1% risk. My next trade is going to be either be 0.5 or 0.25. And then I'll be targeting those 1:4 or 1:5 in order for me to recover from my negative net.
Yes.
Because I think that is more sustainable when it comes to trading prop accounts.
Prop firms,
What do you think about
that? Okay, so
yeah.
we have just few minutes left. Okay. So let me put it this way. Is written in this manner. They give you a 5% daily drawdown and a 10% overall drawdown. When you risk 1% of any account, you simply need to go back and make 1.10% to be able to fill it up. Anything below that 1%, anything below any percentage, you need to add a 0.1 to fill it up completely. Okay. Now, for me, there are two systems to trade in a prop firm. You can be aggressive and you can be conservative. If you're aggressive and you are a day trader, you're a scalper, you can risk 1% to make 3% on one trade. And if you're lucky enough, it goes your way and it's well with you. But if you're trying to be conservative, what I'll tell you is, in as much as you're trying to risk 1% and you're trying to be conservative, what you can do is you can split that 1%. It doesn't have to be on one trade. You can split it. And if you're able to do 0.25 to target 0.75, at the end of 4-5 trades, if you make 3 out of them, you would have made an accumulation of about 2.3% from just risking 1%, which is a very fair deal. Because at the end of the day, if you do that consecutively for 4 weeks, you would have met your goal, which is to make 8% in return. Now, if you want to do it aggressively, you can risk 1% on each trade, making it a total number of 2 trades a day. And now in those 2 trades, you have to make sure you're making 1 out of those 2, because if you lose 2 and you lose 2 the next day, you see there's going to be a problem. It means that you then have to keep cutting your risk to try and meet up. Now, the most important thing I'll tell anybody is, if you're trading a prop firm, make sure you never go below 6%. The moment you go below 6%, your psychology is fucked. And that's where they get to you. The moment you go below 6% in loss, your psychology is fucked, because to come back from 6% into profit, you need to make about 8.5%, first of all, to cover up. Because on a 10K account, if you lose 600, you're left with 9.4. If you do 9.4 5 times, if you do 900 5 times, that's just 45. If you do 94 5 times, which is making 10%, which is making 1%, 5 times, you've still not gotten to 600. So you need to make 8% to get back to the actual balance, which now makes the journey harder. So the idea of staying within the 1% risk is so that it keeps you closer to the starting balance. So instead of just risking 1%, 1%, 1% at every trade, break the 1% down. So you are within that frame. The most you want to ever do is minus 3%, honestly. Minus 3%. And why that is at minus 3%, if you make minus 3.7% back, or 3.6, 3.7% back, you're back to starting balance again, which is easy to make 3% back, because if you risk the same 0.25 spread across 4 positions and you make 0.75, 0.75, 0.75 in 3 trades, you've covered up 2-point-something%. But anything below 6% fucks with your psychology and it makes it harder. You start to think of how you have to make back 8%, then going back to make another 8% to pass the prop firm. So now you see, you've now pushed yourself into a drawdown that needs you to now make 16% of the account. So your psychology gets messed up already, and that's what kills a lot of people. So you need to, so you need to sit, look, be constructive about your risk in terms of prop firms. You really need to be constructive about your risk. I remember last year on my 400K account, I went as low as minus 6%. In fact, amongst my group of friends, I've done the craziest comebacks. I've come back from a prop firm account for minus 10.8% to passing the phase 2.